Good afternoon, everyone, and welcome to STACS Day. This is the panel on Technology Enabler for Financial Inclusion and Sustainability. My name is CJ, and I'm the Strategy Director for STACS. STACS has done a lot of work in the capital markets technology space. We're working with the financial institutions to digitalize assets, processes, and documents. And we've also worked with some of the institutions that have joined us together on this panel today. Apart from that, we have provided the technology for enabling companies to engage in green and sustainable financing activities, because we do believe that companies should take a more responsible role in conducting their businesses. Now, I'm very excited by the prospect of today's panel, not just because sustainability, inclusion, or responsible innovation is a timely topic. And as we heard from the Managing Director of MAS yesterday, Mr. Ravi Menon, FinTech can be a force for good as we embark on creating sustainable planets and inclusive societies. And at the same time, I'm very heartened because we have panelists who come from organizations with sustainability at their core of their business. Now, before we start, and for the benefit of the audience, if you have any questions, feel free to drop it at the browser on the right side of your screen. And subsequently, we'll address some of these questions towards the end of the panel. Now, I'm going to jump into the context for this panel. This panel is very much looking at the role of technology and how technology-enabled innovations can help to overcome some of the traditional barriers towards inclusion that your normal transactions are unable to do so. At the same time, we also shine a torchlight, not just on organizations that have traditionally been looking at inclusiveness activities, but also on the role of corporate responsibility for commercial companies. So this is the topic, and these are the themes that the various speakers will engage in subsequently. So now I'm going to invite the panelists to give a very brief introduction of themselves, as well as the organizations that they represent. Marc, let's go with you first.
Thanks a lot, CJ, and thanks for the very kind invitation. Very pleased to join this distinguished panel. So I'm Marc. I work for the Asian Development Bank, which is the leading multilateral development bank in the Asia-Pacific region. I've worked at ADB for about 2 years now, joining from the United Nations when I was running innovation funds, mostly in Africa, Middle East, and Central Asia. I'm now part of the digital innovation team, which is a fairly new setup that started about 3 years ago as part of our digital transformation, and we'll get to talk about this later on. Thanks a lot. Over to you.
Thanks, Marc. Ben from the BIS, would you like to go next?
So I'm Ben Dyson. I am at the BIS Innovation Hub in Singapore. BIS is essentially the central bank for central banks. And in the Innovation Hub, we're looking at how to use financial technology to solve issues in the financial system.
Thanks, Ben. Andrew, would you like to go next?
Sure, thanks, CJ. My name's Andrew Powell. I'm the CEO of GSX Asia. We're a European-based exchange. We've been recently granted a conditional license to operate an exchange in the Federal Territory of Labuan in Malaysia. And I'm actually based here in Singapore. Previous to this, I was 20 years at UBS in trading technology roles in the intersection of both. Thank you.
Thanks, Andrew. And over to you, Ashok from MasterCard.
Great, thank you. Thank you for having me. Good to be here, to be with distinguished panelists. This is Ashok. I'm with MasterCard. I lead the blockchain and digital assets team based out here in Singapore for APAC. And we have a number of different solutions that we've been working on over the last couple of years, which address many of the financial inclusion and sustainability issues that we're going to talk about today.
Thank you, Ashok. So great, we have a very exciting round of speakers over here, and personally, I'm very excited to see what are some of the insights and sharing that they'll be sharing with us. Now, before we touch on the topic of sustainability, first let's examine the first kind of issue over here, which is how does the individual organization actually utilize technology, or how do they view technology? So Marc, I'm going to go with you first. Given that the ADB has traditionally been providing assistance via financial means. So for example, via disbursement of grants, disbursement of loans, or equity investments. But recently, we've started to see a shift and that the ADB itself has been more progressive towards the adoption and the utilization of technology-enabled solutions. Now, as the innovation lead for ADB, could you share with us what has actually prompted this change? And for yourself as well, what are some of the initiatives that you've been pioneering too?
Thanks. And yes, ADB is a 50 years old organization, and we aim to achieve a prosperous, inclusive, resilient, and sustainable, all these very important keywords, Asia and the Pacific. And so our sort of strategy 2030 sets the course for ADB to respond effectively to the region changing needs. This was true a few years ago, even more true right here, right now. As a development partner, ADB, as you've mentioned, adds value to its developing member countries by combining finance, knowledge, and partnerships. The digital layer is an absolutely key element toward providing smarter money to governments in the region. And while mostly focusing on internal digital transformation, our digital agenda offers through what is called the Sandbox program, the ability to pilot test emerging technology. So under the Sandbox program, which we've launched 2 years ago, we've launched a number of initiatives using AI, like a recruitment chatbot, an automated due diligence tool, advanced cognitive system, tapping our lesson learned database towards improvement of learning, and a few others. As for DLT specifically, we see this as one of the technology that's worth experimenting with. We've recently, to talk about a concrete initiative, we've recently completed our first credit guarantee transaction using distributed ledger technology. We've done this in partnership with Stanchart, a Standard Chartered Bank, and a bank in Vietnam, the Bank for Investment and Development of Vietnam. Just to set the context on this very specific initiative, ADB's Trade and Supply Chain Finance Program offers a guarantee and loan to boost trade in Asia. And it's been a flexible and innovative vehicle for ADB's assistance, especially during COVID-19 pandemic. We've supported about 4,000 transactions worth about $2.5–3 billion just in the first half of 2020, almost doubling from the same period last year. This year's transaction typically included, medical supply, food and agriculture related products. So we work closely with Stanchart to pilot the use of blockchain for our ADB trade finance program. And the pilot transaction was a $50,000 shipment from Thailand to Vietnam. And we work with Contour, which is a Singapore-based company focusing on the use of DLT for trade finance, which facilitates digitization. So the DLT, for those of you who are or may not be familiar with trade finance, it's just an incredibly painful process. And so DLT can really cut the time, the risk, and effort involved in letters of credit for trade transaction. So we've made this happen. It was all real time, confirmed simultaneously by the participants, and something that would typically take days, if not sometimes weeks, took just a couple of seconds. The other DLT use case within ADB is supporting other aspects of our work, single trade windows in South Asia. We looked at land titles in Fiji, carbon trading in East Asia, DLT for higher education in Southeast Asia, or education credential traceability, emergency assistance traceability in Southeast Asia, and a few others. On DLT, just to wrap up, we're not of the view that this is a silver bullet, but we're keen to gain first-hand experience with this, as well as support governments in the region that are looking into it. Thank you. Over.
Thanks, Marc. I think that was personally, I'm very heartened to see the level of progressiveness within ADB itself, especially towards new technology. And in fact, I caught on two phrases over here. And the first is what you call as digital provides smarter solutions, and I think that's an important theme. And the second piece that I also caught as well that you mentioned is about how the role of the pandemic, how COVID-19 itself has actually accelerated some of these conversations of adoption of new technology. Now, the second question then that I'm going to pose over to Andrew is, we hold on to the thought about how COVID-19 has been a catalyst, but even for a young and digital stock exchange like yourself, obviously you have been using cutting edge technology right from the initial onset. What was the impetus for using this new technology? And at the same time, what are some of the competitive advantage that you've been able to garner through this adoption?
Yeah, thanks, CJ. So our genesis was from a European regulated stock exchange, so fully adherent to MiFID II under the European ESMA regulator. So if you think back 10 years ago, we had the financial crisis, and then we have a global response to the situation back then. And so Europe was a very diligent jurisdiction. And one of the things which came out of that was this focus on dematerialization, which we see happening right now again. So basically we see the DTCC finally do away with paper, and we hear about the death of the fax machine in Japan. But in Europe, in Gibraltar, our regulatory jurisdiction, we had already moved to a dematerialized structure, mainly for listing funds and bonds. So for us, it was a natural segue to come here to Asia and to take it to the next level and go from dematerialization to explore and to actually utilize tokenization. So we have selected STACS to be a distributed ledger technology. So I'm interested in Marc's comment. So actually, we have actually taken the silver bullet. So to your point, CJ, we're going to go live with DLT, and we heard from panels beforehand, you know, the very brave efforts of the Australian Stock Exchange and what's happening in Hong Kong vis-a-vis North-South Connect. But it's our decision that we need to use this technology to actually list not only asset-backed securities, but ESG, so environmental, social, and governance. And we think the focus is going to be increasingly, as your previous panelist, Dr. Kalpana, said, on the S, on the social. So how do we not only measure adherence to social listings, but the continued adherence to those listings? So we see smart contracts, new technology, big data, all of these things feeding into our DLT-driven technology to deliver an ESG product, and also on the topic of financial inclusion, using this new technology to enhance financial inclusion via fractionalization. So, for example, you may have a $100,000 ringgit green bond, but how can we fractionalize that and make it more distributable to the Bumiputra, say, in Malaysia? So we see these aspects of technology being critical, and hence we're taking the silver bullet right now.
Great, thanks, Andrew. You've always been a great supporter. Ashok, the next question is over to you. Given that MasterCard is one of the most prominent technology companies that have always been providing financial services, you started from no technology to some technology, and finally to new technology. And last year we also saw the news with regards to MasterCard exploring into the blockchain space, and this year exploring the creation or the technology rules for the central banks to create central bank digital currencies. So from MasterCard's perspective, how do you first and foremost view technology? And secondly, how do you view the intersection of DLT as well as the existing kind of capital markets or the existing technology?
Wow, that's a 14-part question there, Chuan, but thank you. But yeah, I mean, MasterCard's always been a technology company, even from the beginning, and it's at least from the time we know it, we've always had either the tap, not the tap feature, but at least the slide feature that you can actually use your card on a day-to-day basis. And now it's gotten to more of a contactless, which is kind of gotten really important with the current pandemic, right? So you can actually do a lot of things contactless. But we've kind of evolved from being purely a payments company into doing a lot more technology services, and we started exploring blockchain around 4 years ago. We looked around, we said, what are some of the things out there? And instead of actually using some existing blockchain technology, like say Hyperledger or Corda, one of those guys, we actually built it from scratch. We figured if we're going to actually go into DLT and blockchain technology, we wanted to actually have our own technology that we could build on top of. So at the current moment, I think we're tracking around 90 different patents on our blockchain and supporting technologies. So one of the leading companies which have these number of patents on some of the solutions that we've built. Right. Then we've kind of expanded it out to say, okay, what can we actually do with this technology? It's a great thing to have, but if you don't use it and if you can't operationalize it, it becomes pretty pointless, right? To what Andrew was saying is that, somebody's got to take the silver bullet and kind of make it really happen, right? So as a result, we started playing with basic stuff, things which we were comfortable with, which ended up being payments. That's our sweet spot, right? So we said, okay, how do we make cross-border payments easier using blockchain technology? So we built a payment solution. Then we kind of grew from there to say, okay, let's build a provenance solution, right? This is a track and trace solution, which actually is able to identify where goods are coming from, where goods are going. At any given moment, a buyer and seller are able to track exactly where their goods are. So that way they can be comfortable with some of the authenticity of it, right? And this one very much relates to what our topic is today around financial inclusion and sustainability. So if you're really trying to say that, this particular set of goods were built or were created without actually damaging the environment, or using some type of child labor, or those kind of different things, it holds a lot more value. So today's consumers are asking for a lot more information when they're consuming different things. So if they can actually see where some of these goods came from, and they used sustainable methodology, things like what Marc was talking about carbon credits. So all of those things can be tracked and traced, and you can have a lot more information about the items that you're consuming, right? So as a result, our technology has kind of evolved away from just payments into other things that we feel makes us a holistic company that we are, in way of providing a lot more information to our client for them to make a better decision. Now, I don't know if I answered your question completely, but I think it covers the key points that we're trying to make. I know you touched upon CBDC. I'm sure we'll have some additional opportunity to talk about CBDC further down.
Definitely. Thanks for this, Ashok. And finally, over to you, Ben. We don't typically associate central banks with innovations, or we don't put that in the same sentence. So last year, when we first saw the news that the BIS was introducing 3 innovation hubs globally, I think that was something that was a pleasant surprise to many of us. Now, if you could share on what was the impetus that actually prompted this, as well as some of the activities that perhaps the BIS Innovation Lab in Singapore is looking at.
Sure. Well, yeah. So the BIS Innovation Hub was set up for a few reasons. Firstly, to help central banks and the central bank community understand the kind of critical trends in finance and the big change that are happening as a result of technology, but also actually to develop public goods in financial technology. So, for example, where there are problems in the financial system that no private sector firm could solve individually, or even a single central bank couldn't solve, because maybe there's coordination problems across countries, there are network effects that no individual firm can overcome, or maybe even where there's regulatory barriers. We are looking at how technology can be a solution to some of these problems, and also looking at what the central banking community needs to do to enable some of these solutions. So we're doing, rather than just analyzing, central banks are very good at that, but we're actually doing a lot of work in partnership with private sector firms to develop prototypes and working technology that can then, we may not be the ones that put something into production, but we're trying to identify the way forward to address certain problems. So I think we'll come back to it, but things like cross-border payments, digital identity, some of these issues are things that we're working on at the moment.
Okay, thanks, Ben. That's extremely insightful, and I caught on a few, as Marc or Ashok or Andreas mentioned, a few keywords that we see over here. So things like, for example, progressive inclusion, changing needs, track and trace, adherence to social inclusion, social listing. One of the things that I want to grasp on, which I think is quite interesting, especially given the current pandemic, is with regards to what Ben has just mentioned on digital identity. Now, I would see that digital identity could help in underdeveloped nations, for example, and I'll imagine that Marc, for example, or even Ashok will be able to share some of their insights on this. But specifically, the question over to you, Ben, if we touch on where you left off, why digital identity specifically in Singapore, and how does this aid in central banking or help to improve the global financial systems?
So my work is looking in particular at cross-border payments, and one of the big issues in cross-border payments, one of the reasons why cross-border payments can be quite expensive and slow is really around identity. So every cross-border payment has to be checked against sanctions lists. You have to apply money laundering requirements and various other checks. And quite often in the current payment system, some of that information that you need to do those checks is incomplete. It may be corrupted. There may be typos. It may even be falsified, and that results in a large number of legitimate payments getting flagged for kind of manual intervention, where it partially matches some name on the sanctions list, for example. And that creates a lot of frictions and delays. So one potential solution to that is if you could connect the cross-border payment systems into identity systems where they exist, that would give you kind of verified, trusted data on who that person is and whether they should be able to make that payment. Singapore is probably leading in the world in having a very good digital identity system, but there's other countries that are developing systems or already have good domestic systems. But the challenge is that some of these systems are not open to firms or systems that are outside of the country. So you can't, for example, link to the Singaporean identity system if you're a bank in another country trying to receive money from somebody in Singapore. So having digital identity that is open and available across borders is a really powerful way to speed up cross-border payments, and that has benefits for firms and corporates, but also for people making remittances, working in one country, sending money home to their family. So yeah, quite significant benefits in that particular use case.
Thanks, Ben. And I fully echo your point. I was just on another panel during the SFF, and one of the speakers gave a very great analogy of digital identity, right? When they link digital identity to a mobile number, in Singapore, as you mentioned, the digital identity system is pretty robust, and using this mobile phone itself, right, it allows me to do a lot of things. It gives me a one-time PIN. I can access chat rooms, for example. I can make payments using my PayNow account, for example. Now, if I were to imagine that somebody takes away my digital identity, my mobile phone number in Singapore, this is going to cause me a huge amount of annoyance, right? But if you were to extrapolate this from somebody taking away your digital identity to a situation whereby you don't even have an identity at all, how would that feel like? And because of this, I'm going to post the question over to Marc. You have done, the ADB has done quite a significant amount of work with regards to identity and digital identity for the less developed nations. If you could share on some of these insights or the use cases that you have been exploring in these areas.
Sure, thanks. And yes, our focus on digital identity is because it underpins a lot of the social services that many developing countries are requesting from ADB. Whether it's providing services around financial inclusion, whether it's health-related services, or even around agriculture support or emergency relief, unless someone can prove that they are who they claim they are, you can't deliver those services. And what may seem very natural in a place like Singapore or others may not be in rural Papua New Guinea or in the middle of Mongolia or some parts of Central Asia or very rural area. And so this has been the entry point for our work on digital identity, basically looking at a system that is not only working in the most developed areas with stable and reliable connectivity, but also where connectivity is an issue and where people simply don't have national ID at all. We've piloted a really interesting solution along those lines in Papua New Guinea in the past year and a half with some great success. And this has been an interesting experiment where we basically co-designed this between Asian Development Bank, the central bank of PNG, a startup with using cutting edge technology from Finland, as well as a group from the Philippines. And this has been something successful again, and that we're looking at scaling up in other parts of the region. Over.
Thanks, Marc. Andrew, I noticed you unmuted yourself, and I know you probably have some comments on that.
Yeah, I'll just suggest in countries where we do use digital identity. So we've seen during the COVID crisis here in Singapore, the adherence of people using contact tracing software. Similarly, down in Australia, South Korea also been a great example where they have suppressed the virus. Then I would suggest, let's use this new technology. And indeed, this new technology has been used, I believe, in Singapore via MyInfo, which is a MAS initiative. So there is a broker-dealer who's actually using this to, overcome the onerous KYC obligations of potential, accredited Singapore investors. So what I would suggest, the big picture is that such ESG products should be listed on a regulated platform, such as an exchange, rather than bilateral or OTC over the counter. Regulated exchange need member firms, be they the ones who issue, so-called listing sponsors in number one in our case, and also trading agents, people who allow their clients to trade. So I'm saying that, yes, in certain countries where they do have where they have handled the COVID virus by using tracing technology, there is the mutability of, we know who that person is, so let's use that where we can for KYC in AML. So I'm very keen to take another silver bullet using, eKYC, new digital technology for that.
Thanks, Andrew. And thanks also for the bravery shown in taking the bullets for the benefit of everybody else. Ashok, I'm going to go to you next. We spoke a lot about how digital identity provides access to different services, including financial services. Now, of course, as a technology company that provides the financial services, is it true the importance of digital identity to MasterCard? And wouldn't it sound extremely annoying and fragmented if that is the case? And if so, is MasterCard doing anything with regards to this?
Well, I mean, digital identity is important for us, right? Obviously, we want to have as many people included in the financial system as possible, right? And a lot of times, the identity is the I guess it's like the roadblock for a lot of people to open a bank account, right? Because they can't really prove who they truly are. So if we can create a digital identity which can be used not only within one country, but across the border to prove some of the points that Ben was making, it makes it much easier for financial inclusion. Now, just going back to what we were saying earlier about how digital identity can be used. Now, this is where I'd like to bring up my whole CBDC concept is if a central bank wants to actually send funds for say, a disaster relief to a certain part of the country, the ability to have a digital identity to prove out that who you are can be very valuable, because then you can actually have programmable money concepts where those funds can be released to the appropriate parties using digital identity as a validation, as a validating factor, right? So we can actually get a lot more people into the financial system by doing some of these newer concepts. So for us, the identity is core, but what we want to say is that anything can be your identity. And today, something like a phone number or an email address is just a valid identity as what a driver's license used to be 10 years ago, because a lot of people don't drive today. So as a result, they don't have a driver's license now. And a lot of countries don't have a national ID system. So like Singapore does, or a lot of India has just started doing it. But even the US, right? A US doesn't have a national ID system. You either have a state-issued driver's license or a passport. Now, if you don't normally travel outside the country, you may have never applied for your passport, so you don't have a picture ID, which is a nationally recognized ID. So how do we really get past that? And I think a phone number or an email address can be just equally as efficient playing a role as digital identity.
Great. Thanks, Ashok, for this. So I'm going to jump from digital identity to, I would say, the core business of some of the panelists on the call together with us, which is more towards the aspect of digital currencies as well as the aspect of digital securities. So Ashok, if we continue where you left off, you mentioned about the role that digital identity can play for sustainability, for financial and social inclusion. Similarly, what about the role of payments, for example, and how does this then aid in having a more inclusive society?
So I mean, if we pick up from what Ben was saying about remittances, right? That's one of the key elements. You're moving money cross border, right? And it's an important part of a lot of economies where a lot of economies are there because of remittance coming in from foreign countries where people are working outside of their natural homes, so to say. So I think it's important, and a lot of these people don't necessarily have a bank account. So how do you really get some of these payments to them where they can actually use it? In the past, I mean, I remember, when I was growing up, I would send money back home, and my dad had a bank account, so he was able to actually go to the bank account and use an ATM and pull money out. Now, let's assume for a moment you don't have. Going back to our digital identity piece, you don't have an ID. How do you open a bank account, right? So how do I actually get money to you? So what MasterCard is able to do is create solutions to say you have prepaid cards or even a phone where you can actually fund monies into a digital wallet which is sitting on your phone, right? Or a prepaid card which the person can use to make purchases downstream, right? It provides the additional security and safety, the fact that from the olden days, you don't have that Havala concept where you walk into some back office and give them $100 and his companion will show up at your doorstep and give you the $100 in local currency, right? So this actually provides a safety and security that you will get your money, you'll get all of it, and immediately be able to use that money to buy basic necessities and have a continued way of life, right? So we're trying to make things which is much easier for them to achieve without having the roadblocks of things like identity and bank accounts, which are required to be part of the financial system.
Thanks for this, Ashok. And I think a lot of the points you touched on about cross-border and remittances. In fact, this was something that I think was highlighted quite prominently yesterday when the managing director of MAS, when Mr. Ravi Menon, spoke about financial inclusiveness. And specifically, he also highlighted the example of the connectivity between PayNow and PromptPay in providing affordable and cross-border remittances. Now, Ben, I think if I'm not wrong, this is something that the BIS has worked quite extensively on. If you're able to share the experience, the insights on that, and as well as how does this actually lead to a more affordable and a more financially inclusive society?
Yeah, so we're one of the projects we're looking at the moment is how you link together fast payment systems in different countries. So many countries now have a fast payment system where you can do an account-to-account transfer within, often within a few seconds, certainly within a couple of minutes. And but when these systems are designed, they're developed very much for the domestic context. So they're not necessarily designed to link to fast payment systems in other countries. What we're looking at now is how you could actually link those systems together, and you could do it bilaterally, so country to country. The problem is that gets very complicated once you add, more than a few countries, because the number of links between each country grows exponentially. So that points to some kind of multilateral platform, something in the middle that every country connects to. That routes those payment messages and handles the kind of currency conversion. So we're exploring whether that could address some of these problems in cross-border payments and provide much faster cross-border payments. And as I was saying earlier, some of the reasons for that The central banking community is really aware at the moment that there are major issues in cross-border payments. The Committee for Payments and Market Infrastructures, which is almost a kind of a standard-setting body hosted at the BIS, has released quite a significant report with the Financial Stability Board on the measures that need to be taken to significantly improve cross-border payments. And this is one potential way of contributing to that. And the benefit for the end users really is that their payments don't get caught up unnecessarily in these false positive matches against, say, the sanctions database, and particularly for remittance users, that they wouldn't have to be paying an average of 7% to send money back home to their families. So there's a lot of work to do, but also a lot of potential benefits.
Great. Thanks, Ben. So we spoke a lot about digital identity and also the payment aspects, right? We talk about cross-border, we talk about remittances. But on the flip side as well, financial inclusion, social inclusion goes beyond just digital identity on payments, but also about helping people to find access to capital. So in this aspect, I would like to pose the question over to Andrew. How does the concept of digital securities help with financial inclusion or for sustainability?
Thanks, CJ. I think I've already spoken about the supply side. So using new technology to deliver settlement finality, new types of products, new types of asset-backed securities, hopefully with an ESG label with emphasis on the S. So that's on the supply side. But on the demand side, I think, I think in this part of the world, it's very, very exciting. So there's 600 million people in ASEAN, of which, say, potentially 25 million are so-called Henrys, high earners, not rich yet, Henrys. But only, say, 50,000 of them currently participate, say, in the bond market, which I know you've been looking at with your proof of concept, BIS Malaysia, with STACS up there. And also there's a firm here called Bond Blocks, which has done a bond issuance, an OLAM bond, which was issued and then subsequently traded. The issuance was actually done with the SGX. But, so there is latent demand there. But I was on a panel, it was actually put in production last week, but to be shown tomorrow with the Labuan IBFC, under the auspices of Farah, who's the CEO there. But a lady called Helen Walby from the Alliance for Financial Inclusion talks about female inclusion, and this is the base of the pyramid, which she says needs to get involved. So it's similar to the analogy which Ashok talked about in digital identity in India. So we saw a few elections ago when PM Modi got elected, how there's a huge groundswell of voters suddenly use new technology. We've seen with M-Pesa in Africa, for example. But I think in this part of the world, Helen's talking about financial inclusion. The point she makes is that she suggests that 30% of 30% of women are Islamic, and Egypt, and now she in Malaysia is working on having financial inclusion here, and by and large it involves using digital identity, and if we can get them KYC'd, then we have a whole new subset of potential demand for these ESG products, which we are going to be listing. So it's demand and supply. I think the supply is taken care of, as we heard it. Again, to quote Dr. Kalpana, from Deutsche Bank, ESG is fully enmeshed in the big banks now. Larry Fink from BlackRock talks about it. Ray Dalio is coming to Singapore to set up a hedge fund. I'm sure I'm going to be telling Ray, ESG. But it's the demand side which we have to activate, and it's the base of the pyramid. So it's this Egypt analogy. We get the pyramid happening, we get social inclusion happening mainly through, or to a significant degree, through female participation.
That's a great analogy, and separating into two different teams on the demand side and also on the supply side. Marc, I'm going to pose the next question over to you. We have seen one of the ADB working papers, although with a caveat that the person that wrote the ADB discussion paper was not an ADB staff, but that paper discussed quite a fair bit on how green bonds, for example, could be placed and issued onto a blockchain, and what would be the benefits if we were to go down that route. Now, if you can share on some of these thoughts or insights, and also on the role of tokenized or digital securities in enabling for financial inclusion.
Sure, thanks. And so yes, ADB has been doing a bit of research around this subject. Just for those on the call, the bond market, the green bond market, is just an incredibly large potentially market that is completely under-tapped. I mean, the bond market globally is about $100 trillion. And the green bond only amounts to about, I think, 1.5–2% of that. So it's very low. And this is for multiple reasons. Market failure to the adoption of the green market is directly linked to volatility, but also issues around high transaction cost, whether it's onshore, offshore investor, the broker fees, etc. So this is something that we at ADB are looking into. Our colleagues from the World Bank about 2 years ago used DLT to issue one of their bonds. And it's been an interesting experience, in fact, with support from the Australian bank. And so we're looking into it. The other part that maybe I want to bring into this, and I'll send a link to this paper, which I think makes for some really interesting reading, specifically on green bonds. But beyond that, ADB is supporting a large amount of companies in terms of raising equity. And we have pretty high standard, which is all aligned with our AAA rating. And we find out that some of the deals that are brought to our attention, and we do the whole due diligence and IDD, etc., we may not take them, and yet they're probably, the vast majority, probably about 80%, would fall just slightly below the standards of ADB. And this means that they're still investment worthy, especially if you look at a tokenization approach where you distribute the risk. And so this is something that we're currently looking into to set up a system where investment of sort of smaller size can access opportunity that are fractionalized. So watch this space. This is something we want to explore, and that we think has a lot of potential in terms of raising the level of equity available in some of those developing countries where we work. Over.
Thanks, Marc. It's a very interesting insight and concept. So I would be very much looking forward to how this tokenization of this 80% of companies, and how could we invite the private sector to actually kind of play a supportive role in this as well. Now I'm starting to see quite a few questions coming into the browser. Some of these questions are pretty hard hitting. I'm not going to mince my words about this for sure, so I'm just going to jump straight into this one of these questions. The question goes, at risk of sounding too mercenary, apart from the PR, apart from the good middle release, why do commercial companies like GSX and MasterCard engage in sustainable financing activities? I think this is a question that's directly posted at Andrew as well as Ashok. So Ashok, if you would, or Andrew, if you'd like to go first.
Yeah, when it comes to sustainable development goals, it's been estimated by the United Nations that this is a $2 trillion industry. So yeah, I'll be happy with 10% of that and listed on my exchange. So it's happening. I mean, as I mentioned, alluded to before, if Larry Fink from BlackRock, the biggest pension fund in the world, gets up and talks about, I'm not really worried about when I do my profitability models or my analysis of a company these days, I'm going to instruct my portfolio analyzers to look at sustainability, not necessarily, EBITDA and all these other fancy terminologies, then I'm listening. So yeah, so from a demand side, if the big pensions funds want this, from a product development side, that BlackRock is also a substantial issuer. Again, I'm listening, and $2 trillion is a huge amount, which we got mentioned on the previous panel from sustainability. And again, if I'm hearing from Dr. Kalpalo that ESG is fully immersed, it's not a separate silo, it's just part of the business of Deutsche Bank, then I'm listening. And also from the Bank of Thailand, listening to Kun Switzer as well. When the regional banks here is talking about Thailand, how can they, the average age of their farmer is 60. How can they empower their farmers to sort of keep in the business? So they're looking at technology. I know back down in Australia, even though I've been in Singapore for 15 years, Australia is looking at this. So for example, we hear about solar panels, we hear about salinity down there at the Great river systems, the great food basket of Australia for this part of the world, you know. So there has to be some type of sustainability to keep these, this whole region and indeed the world happening. So yeah, I think there's enough evidence out there. And I'm happy to list it on my exchange. Thank you.
Thanks, Andrew. Whenever there's a threat, there always is an opportunity for you to kind of venture into too. So I definitely agree with you on that. Ashok, over to you.
Yeah, I mean, I think for us, sustainability is something that we want to give back, or we want to continue to give back. It's very close to our heart. You know, one of our pillars we've actually built around is the fact that we want to have financial inclusion. We want to have sustainability. It's a way for us to kind of give back to the community and help bring up that whole area of people who are not included in the financial system. We want to kind of address some of the damage that has been done to the environment, and how can we use our size and our strength to kind of fix that, right? Because I mean, as consumers, at the end of the day, I'm a MasterCard employee, and I have a MasterCard. I'm a consumer, so I'm looking for some of those same things a lot of our consumers are looking for. So as a result, we feel that it's important that we actually give back, and we make those sustainable promises and keep them.
Great. Thanks, Ashok. So previously we explored a lot about how the role of technology itself is important for the organization, and subsequently we talked about some of the pertinent themes that might be relevant to sustainability. We touched upon, for example, digital identity, touched upon, for example, digital payments and digital securities. And we talk about the very nice things about social inclusion, financial inclusion, but we don't really delve so much on the negative side of things. And this is where we lead to the second question. And this question is posed to everybody. What to you is the most unsustainable act in the financial industry currently, and what needs to be done to rectify it? Personally, I do think that there's a few unsustainable acts, so it might be tough to actually pin down an exact unsustainable act. But nonetheless, maybe Ben, if we go with you first.
This might be an obvious one, but maybe Bitcoin mining. If the objective is, either to be able to make payments online, or it's to have a useful place to store your wealth, I don't think Bitcoin achieves either of those things.
That's a very interesting, and you are right to say probably an obvious kind of example that I should have jumped on straight away. Marc, over to you for your thoughts on this.
A number of countries, as we all know, are exploring CBDC, and we think that this is also a space to watch with some very specific use case. We also are keeping a close eye on stable coins in general. And this is also something that a number of companies behind stable coins are promoting: sustainability and financial inclusion. The proof is in the pudding, and we want to see successful POC. I mean, Singapore, the Central Bank of Thailand, and I'll also share a really interesting research paper that the ADB Institute wrote with the Central Bank of Thailand on their CBDC experiment, is something to watch. There's, as we all know, varying views on these things, on risk. I think at this point, the experiment is still the phase we are all in, and ADB wants to support this. Yeah, that's where we are on our side. Thanks.
Thanks, Marc. Ashok, over to you for the most unsustainable act in the financial industry at this point of time.
I think physical cash, right? I think physical cash has kind of run its course, because I mean, when was the last time you actually pulled out cash to spend and anything? I mean, I think we all moved to like a digital kind of environment. It doesn't necessarily have to be a cryptocurrency or a stable coin, but even like what say Singapore has done with like e-money, where you're able to kind of use your wallet, your Grab wallet or your Pay Now concepts or Payla, and continuously make payments and instantaneously settle and get the money across, so that way the next level of people can use it. So I think physical cash has kind of run its course, even to a certain extent. Plastic credit cards, right? I mean, I think a lot of it has moved onto your phone. You can actually keep it on your phone. You can actually have multiple cards on your phone, so that way you can because it creates a lot of waste. A number of cards that each one of us has in our wallets, and let's say if it lasts for 5 years, you could potentially have 12 to 50 cards that you go through over your lifetime. That's a lot of plastic to throw away, right? So those kind of things we need to kind of think about and say, how do we really make things one, seamless, and secondly usable, and you don't need it anymore. I mean, why create some of these additional things that you don't really need when you have a digital way of fulfilling it?
Thanks, Ashok. And Andrew, over to you for your most sinful act in the industry.
Look, I think a lot of the asset purchases by central bank, money printing, I think that's going to be unsustainable. Sure, right now it's good for certain asset classes, maybe for stocks and maybe for real estate in my home country of Australia. It's fantastic, but that's not really going to be sustainable for when it comes to social inclusion. And I also think that eventually, and that's going to be enough. Even look, it's very noble, but in Australia and Singapore, there's rental subsidies. So who knows what the MAS is paying a month? Is it 6 billion? I think Australia's about 11 billion. Australia's going to have the highest deficits. The state governments are going to lose their AAA credit rating. Even the RBA governors come out and said, look, we don't even necessarily have to look at the credit rating anymore. It's all about job security. But how sustainable is this going to be? So then it goes back to getting sustainable investors. So it's back to the supply and demand. Let's list sustainable products in financial markets, and then let's open the door. Let's democratize those who can participate, and let's move away from government-funded, say ESG ventures, and outsource that or give that back to the public to invest. So stop the money printing. It's eventually got to stop, and empower the public, but not just the elite bankers. The 600 million here in ASEAN. If everyone puts $10 in for a green bond, that's not a bad thing. You can't just let the government print money to effectively issue green bonds, as sovereign debt. Why not just sort of outsource that and have more inclusion into such investments? So stop the money printing.
Thanks.
Sorry,
Thanks, Andrew.
Bank of England. Sorry.
So I've got another question from the audience as well, and this directly touched on one of the themes that Marc previously brought up, which is how the role of the pandemic itself has helped to further propel the advancement of new technology. On the flip side, though, this question is not so much about the advancement of technology itself, but more of how has COVID-19 itself helped to ignite the conversation on ESG. Is this sufficient, or do we actually need another pandemic before we can get people to move faster? Maybe I'll pose this question first to Marc.
Thanks. Well, I mean, sustainability is at the center of what we do at ADB. This is the core, this is the foundation. So that has obviously not changed. I think the pandemic has had all sort of effects, including on digital transformation, etc. But whether I think we are at a point where a second pandemic would create more destruction, even more destruction, rather than any benefits. I mean, from our perspective in the region. So would it push the sustainability? Maybe it would, but I would think marginally against the destruction it would cause.
Thanks, Marc. And Ben, if we go next with you from a more public or quasi-sovereign kind of perspective, do you think that the COVID-19 pandemic has kind of initiated or pushed the conversation towards sustainability in a greater direction?
I think it may have distracted people a bit over the last year, but the impression, at least I'm getting from the Singapore FinTech Festival, is the attention is shifting now, and I think people realize how urgent it is to address these issues now. Basically, there isn't a lot more time to wait.
Great. Andrew, over to you more from a commercial perspective.
Not so much from a commercial perspective, but as the previous panelists, 2 panels ago, were suggesting, we know we're going to be not only we'll be looking at the E, but increasingly the S, the social and the ESG acronyms going to be becoming more and more important, and how can that actually benefit investors and actually allow financial inclusion? And then it comes back to my sort of thesis about supply. So sure, we're a regulated exchange. We're very happy to list such products, and then demand, and then using all the themes we've spoken about, digital identity, et cetera, to empower people to respond to the virus. So we have to wean ourselves off government intervention, is my humble opinion.
Thanks, Andrew. And finally to you, Ashok.
I think it's a tough one, right? I think we're already on the road to be a lot more careful about a lot of different things. And I think this pandemic has actually accelerated a lot of those things. One, the use of digital currency, I mean, or like, use of e-money, so to say. For us, I mean, it's been the fact that we're able to do contactless, the fact that people are using a lot more e-commerce because they don't want to go to the malls. Some of those things are actually helping people, primarily because you don't have to touch cash to make a payment, right? The ability to make a payment without actually physically touching cash is a great thing. So it has accelerated. It's actually made people realize the importance of some of the things that the pandemic has brought to the surface. And I just hope that we can keep the momentum going, right? And not kind of slow down now that the vaccines are around and things are going to go back to normal and air travel is going to resume and all of those things. And I want to make sure that we kind of keep our foot on the gas and keep heading in the right direction.
Perfect. Thanks, Ashok. As with all great things, unfortunately, we have ran out of time. But at the same time, we do have some unanswered questions in the Q&A. So if anybody still has an insanely hot and burning question that they absolutely want it to be answered, please do feel free to drop us an email at info@stacs.io. And if you want to address it to a specific panelist, just let us know and we'll forward the question over. For now, a huge thank you first to the panelists for sharing their insights, and also to the audience for listening in. I think that we have discussed quite a fair bit of content over here, from the role of technology within a company, the role of corporate social responsibility, to even some of the sins that we are seeing in the capital market, in the financial industry, be it whether we are mining Bitcoins, whether we are still using physical cash, which is a travesty, or even just using plastic cards for our payment. So thank you so much for your time. Thank you so much for listening in, and I wish everybody a great day ahead. Thank you.
Thanks a lot.
Bye. Thank you.
Bye for now.